Hey fellow stock guardians, happy Monday, June 14th, 2021. I'm Hoda, StockCard CEO, reporting to you from a mixed stock market. Today's market recap is researched by one of our research analysts, Felipe. Thank you, Felipe, for an excellent recap of the market. He looked at investors' expectations from the Fed and researched why Shopify's stock jumped and EV maker Lordstown's stock dropped today. The stock market indices started the week with mixed results. After last week's volatile sessions, the market set a new record today. Technology stocks overperformed, with the Nasdaq index rising by 0.74% and the S&P 500 index reached a new record high for the third session in a row. With inflation rate above the Fed's target and a steady decline in the number of new jobless claims, investors believe the Fed's officials might start rolling back pandemic-era policies this week. Something to watch as we go through the week. Shares of Shopify, SHOP, were up by more than 4% on Monday, after news that the credit card processor Stripe would make its debut on the public markets. Shopify's investors were pleased to remember the company is an investor in Stripe's previous funding rounds. Although the investment didn't grant Shopify a controlling interest in Stripe, the markets expect Stripe's valuations to increase further than its current $94 billion valuation. That would represent a sweet return over investment for Shopify. From the list of loser stocks for the day, shares of Lordstown Motors, RIDE, were down by more than 18% on Monday. The company announced its CEO and CFO have resigned due to a board of directors investigation. Once hovering above $30 per share, the EV maker's stock is now not too far from its all-time low of $6.69 per share. The allegations are against the CEO and the CFO, accusing them of exaggerating the company's endurance pickup truck pre-orders. Unfortunately, it seems that things are going from bad to worse for Lordstown and its investors. If you remember, EV stocks were some of the most hyped stocks in 2020, and there is reason behind the hype. You should be careful that these type of events like Lordstown's allegations against CEO and CFO cloud your judgment about the future of EVs. Only in Q1 of 2020, the number of electrified vehicles jumped by 81% in the US. The world's transition to electric vehicles has just begun. Invest for the long term in EV stocks that have solid balance sheet and track record of success, and you'll do just fine. Let me create a watch list for you. I go to StockCard screener page, type in electric vehicles in the search bar, narrow down the search to companies with no cash concerns and a strong sales track record. The result is a list of 9 companies that you could use to start your EV stocks investments. I'll leave a link in the show notes for you to have a look. And remember, negative sentiment in the market about the overall EV market could be an opportunity for some smart investors to invest in well-managed companies that are going to shape the future. That's it for today. If you haven't already done so, please give StockCard a try, research as many stocks and ETFs that you want, and consider following a few successful investors by visiting the stock pick page on a StockCard platform. And don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. And as always, help us grow the community by liking, subscribing, and sharing these daily market recap reports with your fellow investors. I'll see you tomorrow.